guys know I was sick all of last week, but I worked all of last week. And here it is. It's a holiday here in the United States of America, and it's a holiday in the UK. Is it a holiday where you guys are? No? Yeah, that's right, because money never sleeps, right? So only the lazy Forex traders take holidays, right? So I'm glad you're here. Thank you for your loyalty. Without further ado, let's get going. It is Monday, the 30th of May, 2016. Welcome to your daily Forex trading strategy session. Let's clear out a workspace, get our minds all set, realign our satellites. Let's get ready for the webinar, huh? Let's go. Hey, anything for you, Zelda. Thank you for being a client of TradersWay. I wake up in the morning and I say, how can I make Zelda happy today? So, welcome to Forex.Today. The sun is shining, that means we got to get ready to trading. But hey, let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. I don't know why this webcam ain't working. You got to have some eye candy here. Let's do this one. There we go. Look how small I am. Oh wait, it was a huge stage. Hello, my name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. We're an ECN if you want us to be. We're a variable spread broker if you want us to be, but here's what we really are. We are your trading partner. And the reason that we do these sessions every single day, 7:30 in the morning, which is New York time, which is London lunch. The overriding goal here is for us to earn your loyalty. These sessions are designed to teach and to educate. And then one day you'll develop skills and you will develop confidence in those skills. And one day you say, I think it's time for me to open up a live account with real money and start trading and start building a profitable and successful Forex trading career. And that you will choose TradersWay as your trading partner, as your prime broker. And together we will work and succeed for many, many, many years to come. So hopefully just what we're trying to do is earn your loyalty. We're trying to invest into you up front, and then once you do have skills, that you will choose us and pay it back. How nice is that? So we do these sessions Monday through Thursday here at Forex.Today, and every Friday at FXStreet.com, where I am also Forex Speaker of the Year. And that just shows that that was earned through your loyalty. So I really appreciate that. Thank you for being here day after day after day after day. Zelda says, I made your day. That's awesome, Zelda. That makes waking up on a holiday when my wife and children are sleeping that much easier. So without further ado, let's get to the charts. So let's confirm that you see the colors properly. Everything look good? I'll give you an overview of the world here. The S&P 500 futures, of course, up 0.25%. Euro stocks up basically nothing, flat. Hey, well, it's holidays, man. Oil basically flat. 10-year T-note basically flat. Euro USD up 0.25%. DAX up 0.25%. FTSE up maybe 0.1%. Hang Seng up 0.25%. Yeah, so fairly flat, but you know what? There's still stuff going on. And one of the reasons that I wanted to do this webinar, even on a holiday, is it's a Monday, and I like to go through the pivot points. There may be some commitment of traders, but I don't think I'm going to have the voice for that, so I'm going to save that for maybe tomorrow. So let's just go through the weekly pivot points, and then pretty soon, obviously, what is it? Thursday, the first day of June. On Thursday, we'll get new monthly pivot points as well. So that's going to be interesting because Friday is non-farm payrolls. So Monday is going to be Mutual Fund Monday, and Monday will be the first real day of trading with new weeklies and new monthly pivots. So one interesting thing that you could be doing on a Monday like this, where there's sort of an overlap, that we try to figure out June's monthly pivot points today and see how that can fit into there. So there's lots to talk about, and that's why I'm here. So you should see Euro USD. Let's take a look at this on an hourly chart. And hang on, I got to get my other air conditioner going. It's hot here already. There we go. All right, so first of all, what is the first thing you see? You should be looking for a direction of trend. This is an hourly chart, so we're just basically looking back at, over what happened today and then what happened on Friday. Does this seem to be trending up or does it seem trending down? Thank you very much. So we can see that because it's made a series of, a high followed by a new lower low, followed by a lower high, followed by a new lower low. And over the last London Open, we've been making a new high. Or not a new high, a lower high. So, here's what happened on Friday. The new day starts. We make a new lower low. So one of the things I like to do once we make a new lower low, oops, come on now, is I take this lower low and I drag this across, and it's my approximate new sell zone. And I'm doing that down here, basically London Open, right? Or wait, did I get this right? Or am I misspeaking here? I think I might be misspeaking it. Let me double check. So that's London Open. So this is that Wednesday? What? Hang on. Let me review this. I might have messed up here. Yeah, I apologize. Hang on. Let me take a look. Thursday. No, that's Wednesday. Thursday. Oh, sorry guys. Hang on. Is it Friday? Is this Friday? Man, I totally messed up today. All right, sorry about that. Nonetheless, we have a high. Just my days are off. So where is this? This is Friday here? Interesting. Somehow my brain is off today. Could have been the whiskey, might have been the gin. Could have been the 3 or 4 6-packs, I don't know, but look at the mess I'm in. All right, so anyways, that's what I'm trying to get to. My days are off. I don't know why. Maybe the pivots are off. I don't know. So anyways, let's just go back to here. I was trying to line up days, but I'm way off. All right, nonetheless, the nice thing about fractal geometry, the time isn't even an issue. It's the pattern. So what I'm looking at is that. Okay, so in this situation, if I were a bear, and since it's trending down, there's good reasons to be a bear. Okay, that you would have this area here is your sell zone. Now, of course, you could also do Fibonacci, right? Yeah, we'll look at that in a bit, Chuck. Okay, so you could do a Fibonacci. A lot of you guys might like Fibonacci. What is this? About a 3A2, about a 50%, about a 618, right? Notice that the psych levels are also playing an important role. Okay. Sorry. Yeah, my voice is almost back, I think. Okay. So this whole zone here, and you can see I actually already have it marked up. This is the 382, this is the 50%, and this is the 618. So when I start in the day, one of the things I look at is what happened yesterday. Okay, that's my sell zone based on what happened yesterday. What happened yesterday? This is yesterday's high, as marked by this blue line. This is yesterday's low, is indicated by that blue line. And this area here that I've highlighted is the 382 to 618 Fibonacci retracement of this range. And I do that because if I believe, yes, the previous trading day was bearish, and of course it looks like it was, right? High, low, and close are the same, right? A high, low, and close are the same. Then there's a high propensity for today's trading to also form a high and a low. So this is the area I look to resell. And that's just, I call that actually the Asia fade. Very often that what will happen is Asia will head up, as it did here at the Auckland Open, and then Tokyo really took it north. And then very often, London drops this like a ton of bricks. What is one possible reason that London didn't drop it like a ton of bricks today? It's a holiday in the UK. There's nobody trading. Nobody is as dedicated and as professional as you and I. Okay? That's why. But we're still in this area, and it's just interesting now that there are some people in London, I'm sure, that are trading, and there are some people in New York. Maybe there's enough volume here. But New York's opening soon, and we're basically testing the 382 Fibonacci retracement. Okay, we're overbought here on the hourly, and we're in that roll reversal area. So somewhere between where we are now, which is just about 40, and a little bit higher is 50. Okay, 111.50. The interesting thing about that is 111.50 is approximately the 50% Fibonacci retracement. So that works out really nice. If I'm already a bear, there's a confluence of information going on. That makes me feel nice, makes me feel good. Okay? You also you look at the high, the low, the close, you divide that by 3, and you get your central pivot point, which is approximately the 382 Fibonacci retracement. So right now, what we have, if I go into a smaller time frame, is we're tickling that 382 Fibonacci retracement, okay? And we also are tickling the daily central pivot point. Okay? Okay? See, let's see if I can zoom in here. All right, you see the confluence of resistance? There's your 382. Here's your central pivot point. Okay? The 382 is 111.45. The daily central is 111.41. And of course, up there you can include the midpoint psych level, which is 111.50. What's the most important piece of information here? That you had already previously decided to be a bear. Okay? You don't want to be making those decisions on the fly. Do you remember our discussion last week about setting up an ambush? Okay. The interesting thing is, you know, there was bullish opportunities at one time on this. Because, excuse me, this green zone is actually long-term support. Okay. I don't remember what, someone asked about the channel. I don't remember what the channel is about, so. Rectangle, text, arrow, arrow. I don't remember why it's there. Okay. So generally speaking, I'm looking at lower low, lower high, lower low. And if I was a bear, I'd presume a lower high at resistance. I see a confluence of resistance. Okay. 15 minutes ready to fall. Hourly's thinking about it. So why not? Okay. Why not? For that, you'd have to be a bear on the euro, and you'd have to be a bull on the US dollar. And I see nothing wrong with that. And then one thing that you might also want to look at is, at some point in the future, we want to touch that 21. Brendan says, what about the 4-hour Stokes? Okay, this is why I say you already need to be a bull or a bear. You can't be looking at all these things and trying to make a decision on it now, because you can get faked out. Okay? Okay, now you can pay attention to this and say, all right, you don't want to sell with this. Okay, fine. So now you have to wait basically 3 days, or you need to start buying. But if you're worried about that, you're really late. Okay, if you bought down here because of this oversold oscillator, then now you'd be able to jam your stop. Okay, and buying at 111,000, okay, if you're a bull with a 4-hour Stokes, is reasonable, right? Now, as a bear, you need to make some decisions, because you can say, just because this is down oversold, it doesn't make it bullish. When it's way oversold and in the sell zone like it is here, all it means is everybody on the planet is selling. And that is no reason for you to be buying. That's called standing in front of a freight train and betting your buddy that the train can stop in time to not kill you. That doesn't sound like a good bet. Hey, I'll bet you it'll stop. Rolling like a freight train, lying like it never came, feeling like a space brain one more time tonight. Right? No. What it means is everybody on the planet is selling this pair. That's what it means. Okay? Now, as a bear, that's not necessarily good, because you can know, as some people get out, this could affect things. If this oscillator rises above this gray line, okay, it's much more bullish, okay, because you're in a situation like this now. You see, when it's oversold, doesn't mean anything. If it's back in the trade zone moving up, it's important, because what the stochastic oscillator is measuring is candlesticks relative to the previous candlesticks, depending on what your settings are. Okay? And when the oscillator here is falling, it's just saying candlesticks relative to the previous candlesticks are making lower lows. When it gets way down here, what it's suggesting is it's still bearish, but they're not making higher highs. In here, they're not making higher highs, but as we can see, they're not making lower lows, right? And this is really congestion. Okay? Not making a lower low, not making a lower low. Uh-oh, not making a lower low. Uh-oh, but nor were they really making lower highs, right? Now this one made a high relative to the previous one, and this is why you get a cross. Okay? Consolidate, consolidate, and all of a sudden, uh-oh, this one made a high and a low. Okay, so net result, not much. But again, no lower low. We haven't had a lower low in 1, 2, 3, 4, 5, 6, 7 candles now. Guess what? The oscillator slowly moving up. And on the next higher high, the oscillator breaks into the upside motion. Because it's looking at the last 3 candles and saying, okay, are we making lows? No. And then over here, are we making highs? Yes. Oscillator moves up. Okay? So having it come back into the trade zone says 2 things. Lows? No. Highs? Yes. Are we there yet? No, because under these settings, 835, we're looking at the previous 3 candles, right? So this could, let's say at the close of this candle and into the next one, yeah, we can be in there. And that would change it to be cautious bear. Doesn't make you a bull. Because what supersedes all that is the fact that the entire market is bearish. What it's telling you is you need to be careful as a bear to resell. So what you could be using, okay, so Brandon, you don't necessarily buy because of that oscillator. But as a bear, you could say, okay, maybe it's an opportunity to take profit down here at 111 support, okay? And then for the re-entry now, you can use the oscillator, allow it to look at the previous 3 candles, and if it starts to roll over, meaning the candles relative to the 3 previous candles are suddenly not making higher highs anymore, and then suddenly the candles start making lower lows relative to the last 3, obviously, if it's not making highs anymore, price will consolidate candlestick-wise, and then all of a sudden you'll start to get lower wicks like this. This oscillator will be up here, will roll over, and you'll sell. Okay? If you are bullish in a downtrend, you're probably going to scalp. Now, I know it's a 4-hour chart, so you're short-term long, most likely. Because you couldn't assume a lower low is going to create a higher high, could you? Not if you're using technical analysis. So if you bought down here as a counter-trend trade, your most logical target's going to be somewhere in here. Now, if you enter somewhere in here and the trend is down and you're a bear, now you will assume a lower low, correct? Excuse me. So if you were short-term long here, you could pick up the pips, right? You could pick up the pips here. But selling in a downtrend when it's overbought with a lower high, you're going to conclude, otherwise known as your trade plan, is for price now to create a lower low, so you are long-term short. Okay, you're going to swing low here. Swing low, sweet chariot, coming for to carry me home. Right? And that's called a trade plan, because you could say, well, here I'm short-term long, but really I'm setting up near that 21, maybe a 618 Fibonacci retracement, then I'm going to look for the oscillator to be overbought, rolling over, and when it looks like it is, then I'm going to drop into a smaller time frame and take a shot. Maybe with an oscillator that is congruent, or maybe with a candlestick pattern, so on and so forth. Brookie says, what are both lines above the gray? Let me go here. Okay. This orange one is the daily R1. Richard says, you mean the cross? Well, let me change it to you're saying it's crossed up. No, I pay more attention to whether it's in the zone here. Okay? And then you drop into like the hourly, okay? Check this out. Or not the hourly, the daily, I mean. Okay? It's oversold, right? But it doesn't mean you buy it unless you're a bull, right? Now give me one reason I should be a bull. Yeah, sorry, Charles, about the singing. You know, I'm still fairly sick, so if I can do anything to give myself enough adrenaline to get through the webinar, then I'm going to do it, gold, dang it. So anyways, how do you combine an upwards, let's say you thought that was upward moving, oscillator with a downward moving candles? Well, this is why I start with trend or bias. What is your bias? Do you wake up in the morning and say you want to buy euro and sell the US dollar? I don't. I don't. Oh, Charles is quite good, actually. You're a sick individual, Charles. I think you need some help. Yeah. Charles the Twisted. Yeah. Oh, my eyes are watering, guys. Wow. Okay. So anyways, yeah, we are at support. We're oversold. And you'll say, well, wait, and you tell me. If you tell me to buy it at support when it's oversold, right? Right? No, I don't. No, I don't. Not if you're a bear. When did I tell you to buy at support if you're a bear? Never once. Never. So you buy at support if you're a bull. So if I'm talking about buying at support when it's oversold, it's when price is doing this. And I'll say, oh, look, we've had our pullback. It's a 50% Fibonacci retracement. This is, this my ideal sell zone. And now we were up here. Now we've come back, and I'm looking at the oscillator over here, and the oscillator's trying to come up, and price is about here. So I think I'll put in a trade. I'll put my stop below this lowest low, and our target's up here. That's how you trade. You buy its support in an uptrend. I have a little training device. I can't remember what do you call it? Moniker or something. I forget the psychological word for it through psychology, but you use music in this case to teach your brain. So you want to train yourself with as many different parts of your brain. I forget the name, but here's the little tune, okay? Up, 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 down, down, buy. 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 And you should be able to walk down the streets, and I'm not joking. Like if you're a basketball player, right? You want to go pro one day, you need to be bouncing a basketball all day. You're walking down the halls of your school to lunch, you're bouncing a basketball. You're walking back home after school, you're bouncing a basketball. Right? You're just bouncing basketballs. You should be standing there in the morning eating cereal with one hand and bouncing a basketball with the other, preferably with your left hand. And you should just be bouncing basketballs all day. And I'm not joking. You should be walking down the street thinking to yourself, maybe even better, saying it out loud. Up, 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 down, down, buy. 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 Up, up, down, 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 down. That doesn't sound right, does it? Up, up, sell. Down, 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 down. 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 Up, up, sell. So this is down, 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 down. Up, sell. 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 Down, 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 down. And you're like, oh my God, it's oversold. Buy it. What the are you talking about? Are you deranged? Right? Right? That's where like a big genie should appear in your office. As soon as you bought that, a big genie should appear. Could you rub my lamp? You're like, oh, sorry, genie. Right? You should just pound you right in the head and crush you into the ground. Boom! Sorry, genie. No. So what are you looking for in this situation? How about up, 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 down, down? Right? Or in this case, up, up, down, 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 down. And then what's going to happen next? Up, up, down, 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 down. Up, up, down, 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 down. Until what? One day, and you don't know when it's going to be because you're not in control, one day it could go up, 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 down, down. Buy. Right? Change of trend. And that should really, if you're a swing trader, be the only time you lose money. When the whole world changed. And you're like, huh, what do you know about that? It takes the whole world to change for you to lose money. Brendan says, don't like to buy euro. Yeah, nor do I. So you know what the previous trade plan was? You're going to be shocked. Sell at the monthly reversal pivots with a target of the monthly support pivots. Okay? For the month of May, the high is resistance to pivot point, and the low is the support to pivot. What? Sorry, guys, just simple pivot points. That's it. I don't mean to I don't know. That's all it was. It's just pivot points. Resistance down to support. Okay? That's all it was. Sorry. I wish it was more complicated. Actually, I don't. So that's all it was. So one of the things I was saying is that, we should pay attention to, next, on Thursday, the day before non-farm payrolls, which makes things complicated, we are going to get a new pivot point. Where's the monthly pivot going to be? Well, you have to look at high, you have to look at low, let's just say that's the low, and you're going to have to look at close. Where's the close going to be? Way up here? No. Way up here? No. Way up here? No. So let's say we close at 112. Let's just say we mess around. It's 111.37. So let's say this goes up today. We have another up. Remember the down, 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 up, up. All right, so it makes a little up, another second up. So let's say we close around 112. So this is our close right here. So you got to go high, low, close, divided by, right, H plus L plus C over 3. And that will get you a new central pivot point that drops right here. Boom! We'll call it, what, 113-ish, 113? Yeah. Okay, so this monthly central drops by 100, okay? Which means the new pivot profit zone is going to be down about 110. The M3 is going to be about here. So actually probably be about where the central pivot is. So next month, I'm going to try to maybe sell somewhere in here with a target somewhere down here. Okay? So it's going to go up, 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 and then boom, we're going to drop it like it's hot. Okay? In fact, I might even, now looking at it, I might even want to try to get some of that kind of going on. Okay? Head and shoulders the sucker, right? Well, if this is sloped down, this will slope down. So I think my first idea is correct. Because this neckline is sloped, so the shoulder line is going to be sloped in a congruent fashion. Ray, a drop of golden soul. Me, my name, I call myself. Man, this thing is jumpy, man. So, a needle. All right, so what we're looking at then is up, down. Well, probably more like. There's that channel again. You guys are funny, man. Charles is, there he is. Okay. You get the vibe here? You know what I'm talking about? Play this. Based on next month's pivot points, which haven't happened today, but maybe you should incorporate that in your plan. Yeah, Charlie, not Andrew. All right, so there's that. So did everyone look at Andrew's trade plan today? Andrew took the time. Thank you, Andrew. So Andrew spent, an hour thinking about the foreign exchange world relative to the Great British Pound and the USD. Wrote down a recap of what happened last week and giving you his outlook for the Great British Pound in the coming trading week. He outlined the fundamental calendar in advance. He talked about the referendum coming up and things are going on, and he is a local boy. He's got boots on the ground, yeah, and on a holiday, but he's got boots on the ground. He's reading the local papers. He's watching the local TV. He's got his thumb on the pulse of the United Kingdom, right? And then he's reviewed the charts for you, put together trade plans. So I'd like to thank you. Thank you very much, Andrew. I really appreciate that. That's a well-written post. I'm going to like it. I like it. Thank you, Andrew. In fact, I'm going to follow you, bro. I'm following you. You post, I get updated. I can send you a message if I want. Nice. But, you know, we don't have to have a conversation over this one, right? So, okay. Cool, huh? Thank you very much. Okay, and by the way, I noticed 27 other people have read his post today. Okay. Only 2 people have given a thumbs up, dude. Come on, like it. Share some feedback. Think of it. Andrew spent at least an hour writing that. You can spend 1 second, give it a like. Because you know, actually, Andrew is informed of this information. And we actually track the stats. Andrew tracks his own stats. So authors get this feedback, guys. Authors actually get this feedback. So they know what you like and what's on your mind. Okay? Look at that. Okay? So these are my stats, obviously, but you know, it's important. So if you tell Andrew what you like, he can keep delivering good stuff. Andrew says, thank you for the hundreds of hours I put in. Hey, anything for you guys, man. Seriously. This is my way of giving back. So you want to thank me, get hugely successful. You know what I mean? Just become hugely successful. I used to tell people, you know, just go out, make an absolute fortune, donate a whole bunch to a hospital to develop a cancer wing for children or something, and name it, you know, name it the Wayne McDonell Center for something, you know, I don't know. Well, Fred, I'll put on a dress and lipstick for you, buddy. Hey, I'm not half bad looking. Like, ooh, this feels good. Wouldn't that be frightening, huh? Like, oh, this is going to be a funny joke. I put it on this dress. Ooh, this feels really good. All right, so what's going on in the world today? What do we want to cover? We got to go yens, right? Every single yen is weak today. Why? Did Asia close? Okay. Now, one thing that I look for in a trade setup like this, I got to get this one on the same time, right? Is I look for congruency. Or another way of saying it is correlation. Are they all going up? Are they all going up at the same rate? No. So you can do this as a relative strength exercise. Okay? Canadian dollar is the strongest currency. Oh, snap. What? We're looking at yen pairs, and I look at it and like CAD's ripper hot. Followed by Aussie. So it seems to be a commodity play. How's Kiwi doing? Oh, it's good. Has euro yen made a new higher high? No. Has pound yen made a new and higher high? No. Has USD yen made a higher high? No. CAD yen, Aussie yen have already made higher highs. Kiwi's thinking and stinking about it, and maybe kind of a little bit has. So, okay, Aussie and CAD are strong. Okay, New Zealand is moderately strong. Euro, pound, a little bit on the weaker side. USD is the weakest. Oh, yeah! Because even pathetic yen is stronger than the USD. So I call that a relative strength exercise, and that's why I have setups like this. Now, I highly recommend you do them. So on my chart setup, you'll see things like, I call them scan profiles. Okay? I do things like scan euro. Okay? First of all, make sure they're all in the same time frame. So let's change this one to hourly. Hourly. Obviously, if I'm on 5 minutes, I was already scalping, which means I already made the decision whether I wanted to buy or sell. All right. This is euro pound. This is euro CAD. This is euro Kiwi. Euro Aussie. What's the common denominator? Euro. Okay. So if euro is strong, it should be strong versus everything. So if euro is strong versus everything except one of them, then we've learned that the one that it's not strong against is even stronger. Or if it's moving sideways like this, just as strong. Now, if euro is weak versus everything except one, then you could say euro is weak, plus that other one is also weak. Relative strength. Okay? And this is very, 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 very important. Now, usually this is step 2 for me, because I need to decide, ahead of time whether I want to buy or sell euro. I wouldn't look at this to say buy or sell euro. I usually look at something else. But if I said, let's say today I want to sell euro because of what we saw on euro USD. So I say, okay, sometime today I'm hoping to sell euro. Doesn't mean I pulled the trigger. But it does say, okay, well, euro USD looks like it's in a sell zone, and I'm going to prepare. And then I could go to this and say, is there anything else I can pull the trigger on now? I believe the euro is going to be weak versus the dollar, but it's not moving yet. Okay? Euro Kiwi. Okay? Starting to fall. Do I want to take this one? Maybe. Is it a lower high? Yeah, maybe. What's the trend? There isn't any. So I say, well, probably don't want to do it. But I'll tell you one thing that might happen here. Okay? Someone might say M3 to M1. Okay? I have a problem with this because you're assuming a trend, because a bear, as I've taught you guys, would sell here. But why would you be a bear if this is neutral? Okay? So you'll always start with the trend first. So I look at that, I'm like, okay, not the world's greatest opportunity. How about this one, Euro Aussie? Again, not the greatest trend going on, right? Not the world's greatest trend at all. What do we have going on if euro's going to weaken here? Okay. Not a lot, huh? The only thing that seems to be working here is the central pivot point. Okay. But even that kind of feels like I'm pushing too hard, doesn't it? Seems to me there's a 50-50 chance here that it goes down, and I'm not even sure how far, probably only here, which means it could just as easily as go here. And we're right in the middle of that. So I might say, I don't want to take that shot. 50-50 chances, not good enough. If I wanted 50-50 odds, right, I'd play blackjack for a living. How about this one? Lower low, right? Sell zone. Okay. Very unfortunate we got caught here. Okay. So let me zoom in now that I've highlighted that. Zoom in a little bit. Okay. If you're a bull, and remember, you can't start you can't become a bull. You need to already been a bull. If you're a bull, M2 to central pivot point is your buy zone. It's just by definition, that's what it is. So you should have probably tried to trade the double bottom. Okay? That's that. If you're a bear, this is your sell zone. M3 to weekly central. Well, we're not even there yet, right? So here's the trade plans. If you're a bull, let it come down and triple bottom. Or let it make a higher high, and then you need to decide here, which is going to be dangerous, right? Because a bear now needs to prepare to sell somewhere between the weekly central and the M3. Okay? There are lots and lots of sell orders right here, guys. So we think. Okay? So if you're a bull, you might as well be brave. Okay? Brave enough to let it make a low, or brave to make it a high and then buy the roll reversal. Okay? Because if it comes up here, then comes back to the central, fails to break below, in fact, the central becomes support, then you've just learned that there are no bears where there should be. Which is a good thing, right? Okay. Well, Alan, what this could show is where things change. You could say, if we're going here just to fall, how will that affect euro yen? Okay. In one of these situations, what if you're long euro yen and you're feeling golden about it? Maybe it's not something you should hang on to for the long term. Okay. Or maybe it says tomorrow CAD will be strong. So maybe you're long CAD yen after a pullback. Okay. Sorry. It's all right. So, would you like to see if there's any institutional trades going on with what, Euro? What do you care more about? Let's see. How about USD yen? Everybody cares about that. Citibank. Citibank has a trade open. They're long USD yen from 109.85. How does that make you feel emotionally? Their first trade on this was at 109.13. They're up 200 pips on the first one, 131 on the second one. Yeah, let's spy on them. So hourly. I don't think that's going to be the right setup. Hang on. These are all kind of ugly. Let's look for pivots on this. So template. I'm going to do pivot clusters. Let me clean it up. Okay, it's got monthlies and weeklies here. All right. Okay, first trade by Citigroup is 109.13. Is their entry 109? Oh, hang on. I gotta change this. 109.13. Well, how far back was that? Okay, 109.13. So let's mark that. 109.13. Yeah, about here, huh? Their second entry was 109.85. And I'm going to put that about here. So, tell me about the traders at Citi. What do you think went into their technical analysis? Okay. Are they doing anything different than I teach you? Sorry, guys, I'm just losing that voice. Hey, so you could work for Citi. You say, I know how you guys trade. Sorry. Here's another bank's point of view on this trade. They're also long at 109.95, so they bought the dip to 110. Or breakout, I guess. I don't know what they did. They bought it, does it say the date? I don't have the date. Oh, no. Yes, May 24th. They went long from 109.95. All right, so May 24th is here. May 24th, 109.98. So they bought sort of this. Okay. Seems a little dangerous to me, huh? That was a poor entry in my opinion. All right. They said the Fed is approaching a summer hike, which would open up additional tightening towards the end of the year. This would confirm the Fed tightening cycle is ongoing. In contrast, the Bank of Japan is most likely considering further easing. The divergence between the Fed and the BOJ policy is therefore likely to increase more than currently expected, which is likely to push USD yen higher. We expect the yen to fall back again as, 1, the currency is no longer massively undervalued, 2, speculative activity is now overweight in the Japanese yen at close to a 3-year high, according to the CFTC, and 3, the Bank of Japan will continue to cut interest rates in July after the government announces further fiscal stimulus measures next month. 4, the government will delay its planned VAT hike, and 5, flows are once again slowly deteriorating as oil prices move higher and portfolio managers switch to foreign assets. That's their trade plan, guys. So they bought this, maybe not technically, but they bought here, which is not necessarily good, right? You can see they could have waited one day further and bought down here. But their outlook looks like 3 to 6 months, right? So they're up 121. Now, guess where their stop loss is? This is not Citibank. It's a different bank, by the way. Let me just put a scan. Okay, let's do it this way. Okay. So they're in at basically 110. Okay, they're long here. Guess where their stop is? Their stop is 105.95, so 106. So they have a 400 pip stop. Is that more than you? There's their stop. Here's the entry. This is how a bank trades, by the way. What is the target? 116. Now we got to go daily here. Their target is 116. Okay. How does that make you feel? To know how banks are trading. So the Citibank trade, they're also in at roughly the same price, slightly better, right? So Citi, and I'll mark this here. Let me change colors on my pen. Okay. Citigroup is in here, approximately. And Citi has a target of 112.5. Okay. 112.5. Citi, C-I-T-I. And Citi stop is 108.50. There we go. So they're risking this much, and they're going there. So one is shorter term, right? By the way, I think you can beat these guys. I think both of those are mediocre at best. Why ask publicize trade for free? I'm not sure what you mean. Mm-hmm. So, but anyways, there's how two banks are playing this trade. Oh, no. Oh, I paid money for that knowledge, Eds. Yeah, no, I paid money for that. That wasn't free. Free? Who's free? Oh, wait, I'm free. All right, but besides that, so yeah, so I paid money, and so, all right, whoa, you're right. Keep it to yourself. It didn't happen. That didn't happen. Shh. So that's that. I think we've run out of time, and I think I've run out of voice. Craig says it's recorded. Yeah, it is recorded. But still, I just thought, I thought you'd be interested in just, as long as I've been around, I've always been fascinated when I see what professionals do, and I always find out that I think I could out hustle these guys. Not that I'm so great, but they're not that great either. There's no difference between you and them and what I teach you. And actually, it brings confidence because, we tend to put these guys up on pedestals, right? Oh, the traders at Citibank, they have billions of dollars. They're like gods. No, they're not. Not at all. You know? The difference between you and them is money. But, buying and selling USD, you're probably better than they are. So, like I've been teaching you all these weeks and months and years, is to focus on trading properly, not making money. Don't worry about it. There's so much money out there, you're sloshing in it. The world is sloshing in money. The shortage out there are for traders that have patience and discipline, that consistently make small amounts of money with very, 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 very small drawdowns, very, very, very little volatility in the portfolio. And they're just very boring traders that slowly but consistently produce. And that someone can analyze your trades, understand what you're doing, understand the risk they take by investing in you, and understand ways to fit you into their existing portfolio. And say, I can count on this guy. He produces X amount, and when things go bad, Y happens. Y isn't that bad. X is pretty good. Here's my money. And there's unlimited amounts of it, by the way. And you know what? You're better than the guys at Citi. If you're smart, if you do your homework. Okay, when I ask you, can you write down a trade plan? Can you give a 3-month outlook? I just gave you a 3-month outlook from a bank. You think they throw down trades without thinking about it first? So what was your rationale for that long? Right? But you put the basic fundamentals together. You have an outlook longer than this afternoon, right? And trade in that direction that has forethought. And then use basic technical analysis. Buy dips, don't buy high, buy low. Well, that one bank bought high, dummies. So I know you're better than they are. Well, they're up 121 pips, and they're going for 600. But you know what? I put you in 600 and 700 pip trades all the time. So listen to the messages I give you, practice very specific things so that you're preparing yourself. Don't just trade. Prepare yourself for greatness, because you're going to need the skills and confidence down the road. And sometimes it's when you go through bad periods and you say to yourself, you know what, but I got real skills, and everyone goes through bad times. And if I just focus on doing the work, I can rebuild my confidence and I can regrow this account. And the drawdown's not that big because I don't take big risks. And you're like, I have the confidence to make this good. But you know what? What you may not understand is the confidence and the focus on the work may be helpful when you're going through a bad period, but it's what keeps you alive during a good period? And you may not have been there before, but what do you do when you're raining pips and you're making seriously good money? And sometimes it's just out of the blue, right? All of a sudden you're like, dang, I'm killing it this month. You have to have the strength and fortitude and, more importantly, long-term focus to slow yourself down. You want patience and discipline? You want to have strength? That's to slow yourself down when you're doing awesome. Because the cliche is you do awesome for a few weeks, and then you give it all back. And usually you give it back a lot faster than you make it, right? Because now you're overconfident and you're doing stupid things. Well, having strength sometimes is to slow yourself down and to say, you know what? I'm doing really good now. I need to be careful. I need to maybe, slow this stuff down because I'm on a 3-year plan. And obviously things are going well right now, but maybe this is an opportunity for me to reduce my risk and stay focused on the plan. And the plan is a 3-year plan. Okay? So if you're making too much money, it's because you have too much risk. Lower your leverage, lower your lot size, and then continue doing the right things that you're doing right. And let me tell you, 95% of traders don't have that strength. And they think it's all about the bad times. No. It's reducing risk in the good times and staying focused on your plan. What's your plan? You want to be a professional portfolio manager trading the foreign exchange? Then act like one. So peace on earth. May the pips be with you. May your profits be above average. If it's a holiday for you, like it is for me, maybe spend some time with friends and family and enjoy your time off. And I'll see you again tomorrow, and the next day, and the next day, and the next day, so on and so forth. I love you, babe, but I gotta jump. See you tomorrow.